muted. Okay. Way to go. Regardless, welcome to the Big Tech Frenzy. That killed my momentum. Jeez. Will Tanner be late? Call she odds 99 cents on yes, less than 1 cent on no. Those people would have got paid. The no's. I was on time. Okay. That said, we are going to be going through Google, maybe some Microsoft, some Meta. Bought some Meta on the dip, but yeah. So why don't we get started on the official? And this is not on Friday, but we are going to be using the great and powerful Fiscal AI. Okay, so here on Google, we ended up getting updated numbers for their quarterly results, so September of 2025. Okay, and if you guys didn't end up watching the results, what I can end up doing is let's just stack all of their things here for the most part. We will stack all their business lines, and you can see just how everything grew on a quarter-to-quarter basis. Look at Google search here. This is just incredible. So essentially just continuously climbing. Even in December, we ended up seeing $54 billion. That's their, holiday spend. And yet that even ticked up higher this quarter to $56.6 billion. I mean, this was a smashing quarter across the board. Essentially what Sundar said was that AI mode and AI overviews is monetizing at the exact same level, or roughly the same level, as what Google search is, which just means that if young people are going onto the platform, that they prefer this AI-driven insights, they don't want to click through on a bunch of blue links all the time. Obviously, they still are, because the AI modes and the overviews are, paying out very well from an advertising perspective. But that's driving up Google search revenue. Okay. On top of that, if we are to just remove Google search really quick, and we'll just go through the list one by one, YouTube ads. Now, this is YouTube ads, not just subscriptions. So subscriptions ends up following under the different category, which is in green right here, which actually saw 21% year over year growth rate. And by the way, just to put that into perspective, what I'm actually going to do, let's drop all this out for a sec. I'm going to view this in a different way, because maybe this is a little bit more interesting. Let's do this and then percent change as well. Google search and percent change. Look at this dying company that is Google. We're end up seeing revenue growth climb up and up and up, now at 14.54%, which has not been seen on search since March of 2022. What are we talking about here? This is phenomenal. Let me make this a little bit bigger by just dragging some of this in. Okay. And so this was search. Search is on a frenzy right now. Amazon's tomorrow, Paul. I think maybe you're saying that, but we'll be live tomorrow as well to look at Apple and Amazon and Coinbase and all those other names that I like covering. But YouTube revenue and YouTube ad changes, okay? Even this is growing. We haven't seen growth like this since March of 2024, and this is just the advertising revenue. Me as a user, because I also use YouTube constantly, I'm paying Apple or Google $0 into this category because I pay for YouTube Premium. Okay. So this doesn't actually fall under YouTube ads. That would fall under subscription revenue. And subscription revenue, check this out, which can include Gemini and some of their in-house Internet of Things products for Alphabet here. 21% essentially, 20.7%. We're seeing insane growth across the board, and we've had such an unbelievable ability to purchase this, by the way. Waymo's doing very well. They think 2026 is going to be a super quarter for them, but let's just do one more and then we can look away. Look at cloud. So the last quarter that had this high of growth was the year-over-year comp that's leading to this growth. Okay, meaning that in order to put up 33.5% growth, that's on top of this 35% growth quarter, which means that the comps that we're going to see for December and March are going to be accelerated on top of this growth rate. Like the numbers we're going to put out for Q4 is going to be crazy, absolutely crazy. Not only that, listen to the most insane statistic from Google, which was their backlog for cloud. That went from, OpenAI, or sorry, Fiscal doesn't actually have it updated just yet. They have it, but I'll show you guys what it is last quarter, and then hopefully they get this updated. But here, so this is the Q2. Look at the massive increase, and I'll even put percentage as well. Okay, 37%. What they ended up seeing is that backlog on cloud, on their cloud revenue, ended up seeing 155 billion in Q3. So it was a 46% increase quarter over quarter, not even year over year. The year over year comp on that is essentially almost double. So we went from, 25% growth to 27 to 37%. And now year over year from that, we're essentially going to see like 80+%. 100. So whenever they put this out, it's going to be $155 billion. That is all just going to lead to their Google Cloud revenue to continue to expand. So what did Google say? Hey, we're accelerating CapEx because, well, we're just seeing such an insane backlog, so we need to create more data centers, right? That's what ended up happening. So if this just continues to happen, if Meta sees no slowdown for them to advance their research in artificial intelligence, they see a big opportunity from a consumer product standpoint, they're going to continue to put more money towards that. We'll show that here in a second. Google is offering those tools to a bunch of companies, including Meta, and saying, hey, if Meta keeps coming to us, if a bunch of these companies keep coming to us, and all they demand is more and more token generation, which is what they're seeing, that, they're going to have to keep supplying. I think there was something like 9 billion tokens per minute is what Google is generating. It's just insane. And so, what was I going to say on top of that? I apologize. Oh, Nvidia. The CapEx is directly tied to what Nvidia is expecting for revenue. And now we're seeing multiple comments from Microsoft, from Google, from Meta, saying that they are going to meaningfully expand the amount that they're spending on capital expenditures, including giving that out to other third parties and just buying some of that, which would not be a purchase of property and equipment if they're going to another company and just buying it directly. So they're just buying a service at that point. So there is so much build out. Nvidia still remains my largest, most optimistic play in my portfolio. We ended up seeing a smashing day today. I keep forgetting I've not been live all day, but I've been following it. It's been something that I keep paying attention to. Nvidia hit $212 today. Okay, this is the first $5 trillion company. They hit $4 trillion this year, first company ever to do that, and then they hit $5 trillion, first ever company to do that, and the first ever company to break 2 market cap milestones in the exact same year. I don't know. I'm going to be all shoulders. I'm going to have no neck because I'm just shrugging too much at what I'm seeing. I can't even believe it. If this data center build out continues to happen, and we're about to see Nvidia earnings here in a second, and that earnings is excluding China and everything, but we're going to see other institutions or other governments and everything buying from Nvidia, and then potentially even China at some point. Well, all I'm seeing is a potential that my $250 price target by end of year might honestly come to fruition, which is insane. But this is what we had hoped happened, obviously. I thought it would have wouldn't have been this poppy, if that makes sense. I thought we would have gotten there at a much more linear rate, that people saw the amount of purchases from these companies and then they adjust quickly. But that's not what we're seeing. But take a look at this. Google, and we can, I don't need to go all the way back this far. I mean, honestly, this is fine. Over the last 2 years, and I'm just adding this for, a 2-year compounded annual growth rate, we're looking at $24 billion in spend, and the fastest year-over-year change, about 85% on their total spend. I mean, it's just crazy. They're accelerating the pace at which they're increasing their capital expenditures. And we also saw really great operating or cash from operating activities. So, free cash flow was still like, what was it, 24 billion or something like this? Let me see. Free cash flow. Yeah, free cash flow, 24.4 billion. With capital expenditures being 24 billion. Does this need to slow down? You tell me. On top of that, if we end up looking at this, we can also go to, what would it be under? Share repurchase? Nope. Share buybacks. What am I trying to type in? Buybacks? Buyback yield? No, I don't want a buyback yield. I want what am I looking for here? What's it called and why can't I think about it? Share-based, no, it's not share-based compensation. Oh, sorry. Yeah, repurchase of common shares. There we go. Geez, I was just blanking there. So, yeah, they're buying back each and every quarter tens of billions of dollars of their stock. On top of that, they're also doing common share dividends. Let's find that now. Common share dividends paid. We'll stack the two because this is what they're spending to give a shareholder yield. Okay. And that's leading them to pay back shareholders. Now, that's not going to be as high. You see the buybacks going down a bit. I mean, it's definitely not as cheap of a company as it was before. But if we go ahead and look at shareholder yield really quick. Yeah, so it's decreased a lot as the stock price has really taken off in the last little bit. But like, imagine buying Google with a shareholder yield of 4%. Okay. Now we're at 1.5%. They're buying back a little less because the stock is much higher. And the stock has also gone from $142 to what we're going to open up at, which is essentially, where are we right now? Let's see. I think it's under ratios. Stock price. Oh, no, it says 243, but that's not true. Did I bring that up? 288.45. So yeah, the shareholder yield is going to be completely opposite of the stock price. So they're going to essentially cross over each other. Anyway. So yeah, unbelievable quarter. Smash across every single segment. Gemini is, trucking along perfectly fine. There are other bets like Waymo looking very successful. This was, looking back, obviously, hindsight's 2020, but I was like, it wasn't hindsight whenever I was calling for massive buys in that mid 100 range of 140 to 160, 170 range. I mean, it was hard to buy back then. The ChatGPT, the Perplexity news, we had insane stories coming out, like we were going to lose Google Chrome, and Perplexity was saying, oh, you know what, we will buy it. ChatGPT said they would buy Google Chrome. Now we have Atlas that seemingly was pretty exciting, but doesn't seem like anyone's actually looking forward to it. I think a lot of people just think that, Google's going to end up putting out a product that puts Gemini directly onto Google Chrome. Is anyone honestly going to switch? So I remain very, very bullish on the future of Google. I remain bullish. Honestly, like this is not, I just realized during these earnings, even with Meta and Microsoft that had large hits in their earnings, and I did buy a small amount of Meta shares during the dip, that these are the most fantastic businesses we've ever seen. I mean, they're running in 100 plus countries, some of them like 140 plus countries. They're getting advertising revenue. You know, artificial intelligence is expanding through every single process of their business. They're, they all have billions of customers. It's just insane. I'm just realizing that these are fantastic businesses that have no reason to slow down. They're growing faster than most businesses, and they're the biggest. Like, it's just, I'm just very, I'm having an enlightenment moment where I'm just realizing that you can still buy the most expensive companies in the world, and you're going to make a lot of money. Or I can't say that. I can't say that. But I have high hopes that I'm going to make money buying those businesses. I'm not an oracle. I've got no idea what happens to these companies in the future. But to me, they do feel like sleep easy, and purchases that, you are buying high based on the market cap basis, but you're not buying high based on the multiple of earnings, and if things are even going to slow down. Like, YouTube looks like it's just continuously taking market share. Okay. They have so much room to expand their business with YouTube, to add in shopping and all these other things, to make creators essentially full-on businesses, and take massive cuts, because there's zero other players. Like, there's Twitch and there's Kick and there's a bunch of these, Facebook, for example, but honestly, they don't compete. X is still not competing. I don't know. Sorry, I'm getting a little off track here, but I'm just a very happy Google shareholder. And that comes from somebody that was like bashing the company early on, even whenever it was sub $100. But I quickly turned around and realized that Google's a monster. This will be one of the biggest companies, and yeah, they own the entire AI stack, the entire stack. If there's improvements in the chips, improvements in energy costs, improvements in humanoid robotics, and all of these things, they will be a part of every new future development. They've got a quantum segment that, like, they're very easy buys for me. I can't believe Sundar and Jensen did a photo op for your thumbnail. Yeah, I always get the leaders together every day. Okay, so let's go on to Meta. Any Meta fans in chat? Anyone here owning Meta shares? And did you buy this dip, the share price of, does it show me? Let's see. Does it show the dip here? No. Let's see. No, because it's in after hours. All right. Well, that's fine. We'll take a look here then. Meta is at $703. The cheapest you could have bought shares was $680, where there was a lot of buying pressure, so that ended up getting bought up. But we were at $756 going into earnings. Okay, pretty decent buy if you enjoy the company. If you think that they're a quality name, you can essentially get this name for 6% off, 6.4% off. But they did end up seeing a tax hit. $15+ billion tax hit to their EPS, which affected, and you can immediately see it if we take a look at diluted EPS here, massive sell-off, or massive drop-off. But that's not actually what we saw. If we take away that, diluted EPS was at $7.25 on an adjusted EPS basis. Let's actually see. I'm going to put them to the test here. Do they have adjusted EPS? Sorry, $7.29, and they do have it. Okay, perfect. Actually, no, it was 725. I was right the first time, and I was looking far ahead into the future. So yeah, it was 725 was the number that we ended up seeing, and there was no drop off if you end up accounting for, or if you're not accounting for that tax charge, but you got to pay your taxes. There's also EU fines that are coming up expected, or litigation next year that they ended up talking about. That's going to happen. EU is just slapping big tech constantly. Trump's also trying to slow that down and stop that as well. So it depends on how you feel about that. But let's go ahead and look at Meta and total revenue. Bang. Look at this growth rate, 26.25%. In the last few years, the only time we've ever seen them beat that was one quarter, 27.2%. Okay. We ended up seeing a massive sell-off on what is accelerated advertising dollars, more impressions, more take rate for those ad impressions. I mean, we ended up seeing a really good meta here. It just ended up getting covered up by comments about increased CapEx. That's scaring people. Okay. I think the Altimeter Capitals of the world, some of these, long-term meta bulls are saying, hey, let's not get back into a 2022 moment where we're overly spending on futuristic, on the future and that not be guaranteed. Okay. Broken down, we can end up seeing, and I'll actually see. I actually don't know this, so we'll take a look at this really quick. Which segment was the fastest growing? Any expectations there? Really quick, I'm going to let my dog out. Okay. I actually don't know the answer to this. What segment was the fastest growing? So we'll end up seeing this. It looks like rest of world was by far the fastest growing, nearly 31%. So if I just hide. Okay. Putting too many things on screen. Oh, wait, did I just hide all the things that I just brought on screen? Okay, good. That's good. No, I'm making this product look good. Okay, there we go. And let's zoom this in really quick. Yeah, so rest of world advertising revenue ended up growing at 31%. Europe grew at 29%, which is pretty freaking high for them. Asia grew at 24.5%. And then the United States grew at 22.6%, which actually seems like the highest that we've grown in these last few. Holy, I didn't even realize this. That's the fastest they've grown advertising dollars in the US and Canada, at least since September of 2022. Let me drag that back one more year, see if anything changes. Yeah, we ended up seeing 31 of September of 2021. It's been a long time since we've seen that level of growth from US and Canadian revenue. So let's drop a couple of these and visualize this a little bit better. That's incredible. We actually saw a higher amount of advertising dollars here in Q3 than we did last Q4. That hasn't happened in 2024. That didn't happen in 2023. And that didn't happen in 2022 either. That is a pretty interesting statistic. That US and Canada advertising revenue was higher than last quarter's or last year's holiday season. I don't think it's an irrational sell. Well, I mean, it definitely could be. I mean, it might get bought up. Let's go ahead and take a look just because I'm an interested one. What, also, this text looks so big. Oh, no, none of this looks good. I might actually do it wide so I can see it. Okay. It just happens that where I'm looking is always on the right side of the screen, and that's where you guys are. But Meta ended up spending an additional nearly $19 billion in capital expenditures. Let's also get a CapEx rate of change. Percent growth. Like, look at this, guys. This is the fastest rate of change that we've ever seen in multiple years for capital expenditures. Now, it's on a bad comp. It's not going to be the same next next quarter whenever they spent 14 billion. This is going to see a massive spike down. But still, CapEx as a percentage of revenue, I think I can actually do that. Capital expenditures, or maybe it's CapEx per share, I think is what I have. Yeah, so this includes dilution, which I don't even think there should not be dilution if I remember correctly. I'm not a huge Meta follower, but I think we are seeing a slight decrease in total outstanding shares on a fully diluted basis. So that's good, and on a basic basis as well. Okay. What actually? Let me just see what their shareholder yield is really quick. I'm just interested. I'm just exploring. 2.46%. Okay. And then if we go ahead and take a look really quickly at their PE is at 33 times, but this is not pricing in the 6% drop. Well, okay. Yeah. Sorry. We need an adjusted PE. I don't know if we'll be able to get that because their PE was only $1 this time. On an adjusted basis, we could actually make a custom metric probably to include these adjusted metrics, but net income actually wasn't high on a GAAP basis because of that. Yeah, that's why PE just took a massive hit, is because of this. But on an adjusted basis, it'll look fine. All right. What was free cash flow? I don't even remember seeing that for Meta. 11 billion, and that's on their highest amount of CapEx. Yeah. So they're spending a ton. That's lowering the total amount of free cash flow, but we did end up seeing a slight increase over the last 2 quarters. What is the ultimate buy this time around? Is it Microsoft, Google, or Meta? Who took the cake? Obviously, the stock price says it's Google. Toronto Blue Jays are up on the Dodgers. Is Game 5 it, or is it like a best of 7, by the way? Once again, Microsoft is not one that I follow nearly close enough. But do we have total remaining performance obligation? 398. Holy. That's an insane $398 billion. Yeah, geez. Okay, let's put their segments of revenue up there just to get a quick glance of how Microsoft did. It's a best of 7. Okay. And what's the score right now? 2-0. Okay, thanks. $77.7 billion in total revenue from Microsoft. This one I have not even had a chance to look at. So free cash flow, $25.6 billion. And then They have a 69% gross margin. They have a 69% gross margin. I don't use a lot of Microsoft products. I got to be so honest with you. The only product that I use of Microsoft's, I think, is Windows. I don't even use Excel. I don't. I try to stay away from their products. I'm a big Google guy. You know, or Zoom or any of those specialized services rather than what Microsoft has to offer. So this is the reason why I don't use them very often, or don't look into them very often. But yeah. Okay. Let's see what their capital expenditures were. If I'm not mistaken, they are Nvidia's largest customer, but maybe that will change soon if Meta and Google continue to spend so much. But you know, Google's is on so many different projects as well, and also their own TPUs and all that stuff. So it's not necessarily, this is not like a line item for Nvidia. There's a lot of ways to spend money. Okay. But Microsoft also seeing an acceleration there. I want to see capital expenditure percent change, 29% year over year. And the highest we saw was back in December of 2024, 62%. Or sorry, no, it was back in March. Just crazy. Just crazy. And they have, I know they do buybacks. Do they do common share? Yeah, common dividends. Just so we're looking at the same statistics across all these names. And yeah, wow, they were buying back a lot of stock back in 2022. And buying a lot this quarter as well. Very cool. Very, very cool. Okay. Really quick, let's just take a pause there. I wanted to talk about SoFi really quickly because I saw this tweet come in from Stockgoat, and honestly, big cheers to him. I really appreciate this update. He put together this awesome tweet. So shout out to the GOAT. SoFi, every analyst update today, Mizuho went from 31 to 38, 28 to 37, 29 to 36, 32 to 35. William Blair has held their $35 price target. Essentially upgrades across the board, even KBW raising to $20 from 18. Dan Dolov is from Mizuho. He holds the highest price target, $38. But I thought this was a great tweet, and yeah, 17.5. I wouldn't worry about this. You know, there's insanely bearish analysts for every company. You'll find them at Tesla, at Palantir, at CrowdStrike. I mean, that's a constant. Okay, you can't avoid it. But what you want to see is that across the board, they're going in the same direction, and they are. EPS ended up getting raised. We can actually see this on Fiscal AI as well. I'll show you guys how to do that in case you guys use this, because I know a lot of you guys have signed up for Fiscal AI or tried the free trial. But obviously, there is a slight learning curve because there's just so much to do with it. But what's it called? If we are looking at estimates, for example, always takes long to load. And we end up taking a look at EPS here. So December of 2025, so full year 25 is now sitting at a consensus of 37 cents. A day ago, this was sitting at 31 cents. Okay. And all they're saying, none of them, aside from Devin Ryan, who made his assumption of EPS before the quarter was actually released. So he has not updated his EPS since then. But he's essentially, or they're essentially saying that there's two choices. It's going to be 37 cents of EPS or 38, and there's no other option here. Now, SoFi did get hit a little bit today because Jerome Powell ended up coming out and saying that they're not really, not that they're not going to cut rates, but that there's just no foregone conclusion. They have not made up their mind. They're at a lack of data right now. And so that sucks. The stock market ended up getting hit, and companies like SoFi are going to really get hit on this news because then institutions from a fundamental level might not pick up the phone as much and say, hey, we need to buy a lot more while rates are high in October and November because we don't want to buy after a 25 basis point cut. Because Jerome Powell gave this little bit of skepticism on whether or not they are going to cut rates or not, that this might end up fundamentally changing how much institutions are saying, hey, we need more loans. Okay, so let's talk about how this actually changed, prediction markets, essentially. From FedWatch, what we're seeing in December now is a 67.8% chance of a 25 base point cut with a 32.2% chance of nothing changing. Essentially, yesterday, this was at 97%. Okay, so definitely a little bit of a change. There's about a third that now believe, hey, you know what? We might end up seeing earnings and nothing, or we might end up going to the next FOMC meet and nothing ends up happening. That Jerome Powell says, hey, we need to learn more. We need more data before we can make a decision. And yeah. So for some companies, like even Jerome Powell even said, for the Metas and the Microsofts and the Googles, whether or not they build a new data center, this doesn't mean anything. But to the very interest rate sensitive banks and lenders, that's everything. You want consensus. Uncertainty is what drives people to make no decisions. So that sucks. SoFi seems to be in a place where no matter what happens in the market, they end up getting targeted for that situation. It seems like everything needs to be right in order for them to see the stock go up. But then again, there's not too often whenever we see Wall Street raise price targets across the board after a good quarter for SoFi. So there was some pain the other day after earnings because, I think expectations on certain key metrics, like 1 million new members a quarter, didn't end up getting hit. That some people are like, oh, well, it wasn't the most spectacular quarter we've ever seen. But then on the next breath, like the way Wall Street was looking at it was, okay, we think they're going to get 850 million of revenue, and they did 950. And EPS, we thought they were going to do 8 cents, and they got to 11 cents. And whenever you look at it that way, it was a smash quarter. China Trump meet in 52 minutes. Well, guys, I have a very, very important guest joining the show at 9:30. So stick around because there will be someone here. And honestly, he might even be here by 9:15 or so. But whenever that happens, we will have essentially a second show. Okay. I was going to do it in a separate live or a pre-recorded video, but we're just going to roll that into this one. Meta and Microsoft are plummeting so hard right now. Let's take a look. And then I also want to talk about Shift4 a little bit. Not that I've gotten around to it. I don't have like a full thesis, but just what Jared Isaacman ended up saying today to clear some people's concerns about that stock ended up dropping over 6+% today. Meta down 6.4%, Microsoft. So it doesn't seem like there's any 24-hour markets just from earnings. You give me a spook. It's 3-1 for the Jays now. Sweet. Maybe one day we'll get to a position where Noto's just popping in on the live at 9:30 p.m. And for him, that would be, midnight? 12:30? Pretty crazy. Okay. Let's see here. Okay, wait 1 second. Donald Trump just said the United States has more nuclear weapons than any other country. This was accomplished, including a complete update and renovation of existing weapons during my first term in office. Because of the tremendous destructive power, I hated to do it, but had no choice. Russia is second, and China is a distinct third. A distant third, sorry. But we will be even within 5 years because other companies testing programs. I have instructed the Department of War to start testing our nuclear weapons on an equal basis. That process will begin immediately. Thank you for your attention to this matter, President Donald J. Trump. That happened about 4 minutes ago. Won't be a deal with China now. I mean, we'll see. We will see. Also, how is Kathy faring selling a bunch of SoFi before earnings, and then SoFi ended up posting great earnings? Honestly, I can't read very well. It's not that I can't read very well. I can't read out loud very well. And for someone that does this as a job, I certainly do stutter and roll over my words and talk very poorly. So I'm really focused on the spreadsheets, trying to work on the stuff that's providing value. But Kathy's always selling low and buying high. It does feel like that from time to time. Let's hope for a deal. Let's hope for a sky-high Nvidia price after Blackwell chips are allowed and actually accepted by the Chinese into some of their big tech names. That would be awesome. Tanner's 28 going on 58. Yeah. That's a good one. Okay. Let's get back into the big tech names. And back into Google in particular. Yeah, I wished that we could end up seeing the revenue backlog on like a visualized perspective on Fiscal AI, because it just looks so freaking insane. It's almost like the Oracle chart back whenever they showed off those other earnings. Do you remember this? Here. Let's look at their... am I on... Okay, there we go. I was like, what the heck? It's not going to look this aggressive for Google. This is their remaining performance obligation, but it's going to look unreal. It's going to have a similar spike like this for Google's revenue backlog for cloud. Okay, we essentially went quarter over quarter from 100 billion, which also was a big step up. We went from 92 billion to 108 billion, and next quarter is 155. It's going to look stupid whenever it updates. Yeah. Okay. Google's gross profit. Is that are we about to hit an all-time high? No. We've been at 60 before, back in 2017. Was it ever higher before? Oh yeah, wow. June 2020, eh? So that was probably the time to buy Google. That was COVID. That makes sense why the margins were so low. It's just every advertising campaign just ended up ending to save some money, while every business ended up getting shut down. So it probably looks worse than it actually was. Okay. Yeah, I don't think there's too much more that I wanted to cover. Until tomorrow, these ratios are not going to update because the price of the stock is only in after hours right now. So until tomorrow, I can't really show you guys that. And then tomorrow we have, Apple. Actually, well, we could just take a look. Once again, a fiscal AI thing. We got Apple, Amazon. I mean, I'm not going to look at any of the healthcare names, or MasterCard we might take a quick glance at, but that's not really what I'm going to be focused on. I'm going to be more focused on like the Coinbases of the world and everything. Let's see what else we have here. Yeah, Coinbase, Strategy, Altria Group, maybe we'll just have a glance, BYD, stuff like this. But it's going to be Apple, Amazon, Coinbase is really the stuff that I'm focused on. I'm not really worried about Eli Lilly or anything. Reddit's tomorrow? Okay. All right. All right. Then I'll also talk about Reddit. Yes. Yeah. Sorry. I see it here now. What is the market expecting for Reddit tomorrow? So this is kind of a cool feature for Fiscal AI as well. They have all of the estimates from Wall Street, but you can just visualize it by dragging out this slide. So you can actually see what they're projecting. From June, this is the quarter that we see. If you look for the E here, it's a little small text on my screen whenever I show it, but I can make it a little bit bigger. Honestly, this is how we should have been doing it from the start. Holy. But from June here, which was last quarter, they're actually expecting 543 million next quarter is the expectation. And then for, are we not seeing diluted EPS? Sorry, basic EPS is where they're putting those expectations. And the expectation for tomorrow is 49 cents. 49 cents of EPS. Yeah. We'll be talking about Coinbase. Definitely. Really curious to see what they have to say about all the digital asset treasuries and everything along those lines. Okay. Let me go ahead and send out this link really quick, and then we'll have the guest of honor. Bear with me. There we go. Amazon's going to be a big one. We're probably going to listen to the Amazon call over anything. Reddit is one that I want to Reddit's one that I want to follow because I might start a position tomorrow. I really like advertising. I really do. But also I've realized that I love owning the user, meaning that in order for Reddit to stop making money, people have to stop using Reddit from a B2C perspective. So it's how strong their brand is. B2B businesses through the products like AppLovin and TTD just make me so worried how much or how fast there can be a switch up of, suppliers for DSPs or something like this for TTD. So a lot of letters. Anyway, it bugs me how fast and how much of a black box those industries are. You can't really go in and get a feel for the product unless you're in the industry. And so you're trusting each and every quarter to see how they're growing. But then, like we saw from the trade desk before, is that, there could be a quarter that ends up happening that just kills everyone's expectations for that business. And it's very hard to see any forward-looking indicators for that. So we ended up seeing a massive stock price drop going from, $144 all the way down to $50, essentially in 1 week. And the companies that own the customer is in charge and can sort of pick which name that they want to work with. So I love Reddit. I think it gives them such a pricing advantage as long as they keep continuing to grow, and we're seeing no slowdown of that. And, it allows them to get so much more efficient with artificial intelligence and, making advertisements better. And there's such a young business as well that, like, whenever you compare the amount of ads per customer that, Meta is seeing, just through their family of apps versus Reddit, you realize like, oh, wow, they could 10x this business on a per user basis, let alone how many new users they can actually bring on. So I am decently bullish on Reddit. It's just a matter of how much Google's affecting their business. And so I want to see that this quarter to see what management has to say. I think they did a fireside chat and they said it's not affecting them or whatever, and they're trucking along, but I'll actually see in the real numbers. Let me quickly reach out to my... Oh, he reached out to me. We were talking on different platforms. Okay. But we should be good now. All right. The next thing I wanted to talk about really quickly, just before the guest of honor, is Shift4. So Fiserv ended up absolutely puking and falling. I didn't see the last time. I saw it at 40+%. Yeah, 44% in after hours, up 2.4%, but 44% drawdown on Fiserv. That might be overblown. But a lot of people suggesting that because some of the concerns was that they had purchased all these businesses and now they're trying to consolidate all this, and that part's not going well, that Shift4 is also going to run into similar problems because they end up acquiring a bunch of businesses. And just like Clover, they're in similar industries for their, payments terminals and fighting for similar customers. Jared Isaacman then said, Fiserv had an Argentinian tailwind that caught up with them, among other issues. Shift4 didn't. And I hope, and I would hope that those that Shift4, this is based on this comment here that he said, people are buying Shift4 dip because the CEO is cool and on Twitter. He said, I hope that those people who are buying Shift4 do so based on a fundamental basis over the last 2 decades and not because I post on X. Earnings in a week. The fact that he's saying earnings in a week, I mean, do you think he's about to shit the bed? And by the way, he's not even the CEO anymore. He's the chairman of the board. But do you think you would tweet this out and say earnings in a week, and then they're going to see some sort of detrimental numbers that end up lowering their stock by 40%? Like, let's put this into perspective. This is a vote of confidence, And now you're getting Shift4 at a price that, like, we haven't been buying since like the, a very long time. Here, let me show you. This is the stock price over the last year. Only during Liberation Day did the stock end up touching, just for the, what do you call it? The wick of the candle ended up getting to 68.90 or 68.09. We are now comfortably sitting at $70 a share on Shift4. I mean, what's going on here? Is this really the dying business that the people assume it to be? I mean, they want to get back up to 30% compounded annual growth rates, good margins. They're acquiring good businesses here. I could be wrong, but maybe this is overblown. Anyway, regardless, ladies and gentlemen, let's shift the conversation a little bit because my special guest is here. Ladies and gentlemen, please welcome the great and powerful Stephen Carrillo.
I don't know if I'm really special or not.
You're special to me.
Oh, I appreciate that, Taylor. Did you go get your patties and chicken nuggets?
I did. And a beef patty.
And a beef patty. You live it on the wild side.
Yeah.
Tanner's on the wild side. Good for you.
Yeah, it's bulk season.
Wait, what is it?
Yeah, it's winter.
No, but what did you know? What did you say?
It's bulk season.
Okay.
What do you think I said?
I did not I don't know, but it didn't sound like bulk season.
I don't. I don't. I have a
And I
couple
got
guesses
news
on what
for
you're
you.
alluding to, but
I got news for you. If you're trying to bulk up, the way you're eating is not working, sir.
I had before. Okay, so I don't bulk up with that serious of a focus. Honestly, I'm on the seafood diet. If I see food, I eat it. That's how I bulk.
How much do you weigh?
185.
You should be eating at least 250 grams of protein a day if you want to bulk.
Okay, so for dinner, before I went and got those chicken nuggets and a beef patty, I had salmon, broccoli, and orzo, and then went out and then got more protein with that. That's my dinner. I feel so stuffed. It's unbelievable. If you go back in this live stream, I'm just like, anyway,
Where's the whole
struggling
milk?
with the amount of food that's in my stomach right now.
Where's the whole milk?
No whole milk in front of me.
No, but I mean, are you drinking whole milk?
I am, yeah.
All right, good. That's all you need.
Three. Well, yeah, you guys call it whole milk, and it's protein milk as well. It's 18 grams per cup.
I've never heard of such thing.
I'll go show it to you. It's Natrel.
No, you don't have to. It's okay. You don't have to. All good.
So how are you?
I mean, I'm doing pretty good. You?
I'm doing well, man. We're seeing the most insane earnings season right now. Here, wait. The milkman's gonna love this. This is your kind of content. Look at that.
The hell is this?
This is a commercial for my milk that I drink. But it's Canadian, so you don't have these brands here. But 3.25% fat and 2 times the amount of protein. 18 grams of protein.
All right.
So what do you think about Meta earnings?
So I haven't. Why don't we do SoFi?
SoFi.
Why don't we do SoFi? Because I haven't even read the earnings report from that. I legitimately got.
Have you looked at Google?
No, I haven't looked at anybody. I know what happened. I read the headline news for all three, but I haven't listened to the earnings calls. I haven't read anything. I legitimately was in meetings all day. I listened to the Fed call on the way home. Got home. I wrote an article, and then hanging out with you.
Yeah. Okay. So
went on that stream for a little bit.
Let's jump into some SoFi earnings. What the heck did you think about this stunning earnings? By the way, the stock is essentially flat from earnings, $30. But at least we're not down. We actually opened down on that day of earnings. What do you think about that?
If I could do a good Al Pacino, I would do it right now. But I can't, so I won't even disrespect it.
I don't even know the reference you're trying to make right now.
I should leave. How dare you, sir? This is why we can't have nice things. I swear to God.
There's a lot of Al Pacino references.
No, there's only one that is applicable to this situation.
Well, it's not coming to mind.
Well, I am sure people in the chat know exactly what I'm referencing right now. I mean, there's people that already said it.
Red, green.
But can you guys name the whole? Oh, it's coming. It's coming.
Just when I thought I was out, they pull me back in.
That's right.
I know that reference, but I don't even know what movie that's from.
I'm so.
What movie is that? Why are you being like this?
Can I curse right now?
Do you come on my channel to make me seem...
No, but the fact that you don't even know what movie that's from is freaking crazy.
It's not Scarface. Is that Carlito? Carlito's Way? Godfather 3. Well, I don't like Godfather 3, so I never watched that one. I watched Godfather 1 and 2.
Anyway, I was 1 foot out the door, was getting ready to exit half the position, and I'm not selling a damn share.
Really?
I'm not selling a damn share.
Is it the EPS?
Dude, I am reinvigorated. I have seen the light. And I might be matching you, Chris, Tevis, and Roy's optimism for SoFi now.
What is with this? What's the switch up here, bro?
Incredible earnings. They have so many catalysts going forward.
Mm-hmm.
I'm going to say it for the first time on your stream. I've not said this before. Why are you doing this?
Go ahead. This is your spotlight.
I may have to come out with a target for next year. I may have to exceed $50.
Exceed $50.
Like, I feel like I want to at this point.
Exceed 50.
Exceed 50. Now, I am not going to say by June, but I'm going to tell you that I'm so freaking bullish again for so many reasons. I'm just going to rattle them off.
Yeah, please.
Q4, they're breaking $1 billion in revenue.
Yes.
I'm going to say it right now. They're breaking $1 billion in revenue in Q4. I'm convinced. This Q3 earnings will be the last time they're under $1 billion of revenue.
The last time.
The last time.
Okay. That's one.
That's one. I think they put up 30% plus growth next year.
30% plus revenue growth next year.
Next year.
Okay.
I can't even believe I'm going to say this. I can't even believe I'm going to say it. I'll leave that one to the end. I think that their banking is going to go through the roof because of all the loans that they put out at higher rates are probably fixed and not floating. And as the Fed cuts, because I think they're going to cut even further than expected, because you're going to get a new Fed chair in May that's going to be like-minded with President Trump. And I think they're going to have some influence over the rest of the Fed and get a couple of voting members to change their tune. I think we could be sub threes on rates by the end of 26. And if we are, that could expand SoFi's NIM and make the banking profits go out of control. I also think originations are going to fly because of the lower rate environment. We're going to see a reinvigorated refi market and an unlocked housing market.
Did you get to see Jerome Powell today and his comments about December?
Oh, I listened to it. He was very melancholy. He was not hawkish, not dovish. And there's no guarantee, blah, blah, blah. But then he comes out and tells everybody that we're not in a freaking AI bubble. So it's like, I'm not really caring what he's saying at this point, to be honest with you.
Gotcha. Yeah, I think it's funny, right? Like the whole reason why we were all excited about a December rate cut was because he said we were going to get 2 more rate cuts through the end of the year. That's why we priced it in at 100% was his comments. And then he's like, hold on, guys. Like, it's not guaranteed. Like you said it.
Right. Like you said it. You said it. All right. So let's keep rolling.
Lower rate driving.
$1 million member quarter is going to come in Q4.
Million. Yeah.
I think. I mean, I don't know, but I think.
Do you want me to confirm your optimism?
Not yet.
Okay.
Let's wait to the big boys. All right. So we got 3 beat and raises.
What do you mean 3 beat and raises? So far this year?
Yeah.
Yeah. So far since being a public company, we've had 3 beat and raises.
Well, so far since being a public company, I mean, I feel like in the past 2 years, we've gotten 6 or 7 triple beats. So they're now, I mean, when you look at the prior guidance going into this quarter and now what the guidance is, so net income is going to go from 370 to 455. How about net income is going to come in over 500 million? Like, I don't believe it's going to have a 4 in front of it at this point.
Wow.
I mean, think about it. He's increasing guidance from 370 to 455. Really, 455? I mean, that just seems like.
Yeah, but you think they could just find 45 million under couch cushions to make it look nice?
Did you see what the loan business did this quarter?
I was
What do
paying a
you
little
think it's
bit
going
of
to do
attention.
next quarter or in Q4 with the rate cut in October that we just got? Think about it.
Yeah, yeah.
So, all right, maybe not 500, but it's going to, you got to think 475.
Oh, yeah. Yeah. I definitely think they beat.
And they're expecting over $1 billion in adjusted EBITDA. So I think that we're on the road because now think about it. You're going to have a full quarter of level 1 options. You got crypto coming back. The only national bank you'll be allowed to buy and hold crypto in. I think 2026 is going to be an incredible year. We're going to get some deals on the RFPs that I've been wanting. I got to tell you, I'm back in. I am no longer freaking 1 foot out the door. I'm back in.
Okay, so crypto. Did you see the stable coin?
Oh, I did. Did you not read the article? I put a whole article out. I did probably 2 paragraphs on it.
Bro, you didn't even see Meta and Google earnings. I mean, I'm busy. Okay, I'm reading the big boy numbers.
I put it out on Tuesday during the day, right after SoFi earnings.
It's a busy day for me. I had Nvidia GTC. Okay, I didn't get around to your thing, but I will.
I did a whole thing on it,
and I recommend everyone read it. Hold on, let me get that as well. But
I did a whole thing on it.
Did you see the video afterwards, where not only did he say that stable coins are coming, SoFi USD, but that he said it's coming in Q1?
Mm-hmm.
How crazy is that?
And they're going to be global?
Yep.
Yeah.
Even in the earnings call, they said Chris, Data-Driven Investing pointed this out. For some reason, they said, "Oh, our North American bank." Why would you ever call your bank the North American bank? Why wouldn't you either just call it your bank or your U.S. bank? Why would you call it North American bank? Is that them trying to expand into Mexico or something? They have a partnership there anyway, and they're doing their remittances in Mexico first.
Well, let me ask you this. If they expand into Canada, are you switching your bank?
It depends. Is SoFi as it is full service? I would. Okay. If it's some half-baked, sign up for checking and savings, and we will invest, and we will bring credit cards, and we will bring all these things a year later, probably not. So it depends. If I had SoFi the way you guys have SoFi, I would switch. I think that's important. Yeah.
So yeah, to say the least, I'm super bullish. Again, reinvigorated. I think 35 tranche is a lock for June. I don't know about 45, but I think we get the 35 tranche.
Yeah. And the capital ratios too, like 20% plus capital ratios on SoFi. They have so much room to grow. Mm-hmm. Their loan book and how many loans they actually sell, like
they're not messing around.
Not messing around.
No. And $3 billion plus of deposits.
I told you whenever they did that dilution, because it was.
Oh, no. I told you when they did the dilution, it didn't matter. We both said it.
No, let's not change history. You were worried.
No, I came out with a tweet that it didn't freaking matter. I'm on the record with that. You got your people wrong.
No, I remember us having a phone call, and you said,
go look at X. Do I need to bring it up? I'm on the record on X saying it doesn't freaking matter. People don't understand.
Okay, hold on. Check private chat really quick, because I'm not going to say this out loud, but do you see that?
Check private chat.
Do you see that or no?
Yeah, I see that.
Okay, so whenever that happened,
right?
Okay, you said, "Oh, now I'm getting worried because maybe EPS is going to be affected by this dilution." And I said, "Yes, it will. It'll be very affected by the dilution because it's going to go up." That's the only reason why he waited after guidance to actually do the dilution was because, they wanted to surprise Wall Street with a large increase in EPS. So they went from 31 cents to 37 cents. And I called you and I said, I think it's going to be 38 cents by end of year. And you said, if that happens, this company is going to go ballistic. Did this not happen?
I remember you didn't have this conversation about that, but I don't remember me being freaking bearish on the EPS. Because I'm going to bring up the tweet now that I made.
I believe your tweet. But then I remember like Noto commented on it or something.
I don't know if you should have said that.
I don't know if didn't he do it publicly?
I don't know if you should say that. Let's just leave it at that. Man, I freaking tweet like more than I thought. Can I like? Is there a way to get this easier? Like, oh my god, I gotta
you are you scrolling for it? No.
Yeah.
Type in what you think you said into the search bar under your name.
When was SoFi earnings for Q2? End of July?
If there's a word that that you typed, or if you only talk about SoFi so often, then just type in SoFi. It should bring up all your SoFi tweets.
No, I found it. Hold on.
What's the Blue Jays score right now?
So
3-1.
Would you like me to show you the two tweets?
Yeah, sure. No, I'm not trying to throw you under a bus. I just remember having that.
Before I do, I need to close the private chats on X because I was looking at what you said. We don't want that coming up on the screen because then we may get a phone call.
Zoom in.
Hold on. All right, messages are not showing.
It's gonna pop up.
It's not going to pop up.
You're going to zoom out somehow.
No, I already freaking went back on it. It's not popping up. And if it does, it's not my fault. So I went over the capital raise, okay? And then I said, for the record, I'm not worried about SoFi conducting an offering, blah, 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 blah.
Okay.
I'm not worried.
No, I remember this tweet.
Okay.
Good engagement, by the way.
What do you mean?
People like you on X.
People what?
Like you. They like your content. Okay.
Yeah, I think they're right. I think it was Roy, not me, that you're thinking about.
Let's move on. 30% revenue next year.
I think
that seems bullish. Let me check what is Wall Street expecting right now. Are they expecting that bullish of expectations on SoFi?
I have no idea. I haven't looked. I'm just saying that's what I think they're going to do. Let's see.
Earnings estimate for revenue is 22%.
2%. I can see 30% coming.
Now, what if? Yeah, I don't know. I mean, we'll have to see as we get there. I mean, but a lot of things could change.
With crypto and level 1 options and a lower Fed funds rate and more originations, it can happen.
Oh, dude, I definitely think it could happen. What I'm not even worried about level one options and crypto and stuff. I think those will be additive, but like, what about student loan platform business? What about home loan platform business? What about getting into business banking? What about getting into some of these things that like are real sizable changes in the business? I think student loan. So not only did they say that student loans is a possibility, in this quarter's transcript, they said that they're actively working on it, doing non-personal loan platform business originations.
Yeah, I mean, look, there's a lot of verticals, and I am planning on putting out why are people saying steroids? Like craziness. And by the way, guys, this camera makes my skin look a little red for some reason. I don't know why. I change cameras. Like I'm not this freaking red. I don't know.
No, people say I'm always like or there's certain lights and stuff where people are like, oh my God, he's like a ghost. Like he's so pale. But I
What
never
camera
hear
should
it.
I go buy? Tell me a camera to go buy.
The one you have is the best one.
No, I just changed cameras.
Well, the one you had was a good
I
one.
didn't like the one I had. I didn't like. I still have it hooked up. I just didn't like it. It zoomed in too much.
I don't know. I don't
know. Don't lie, you're an alcoholic. Dude, I drink milk.
He really is not red. But yeah.
Anyway, I am going to put a big post out on X pleading my case about business banking and wealth management for SoFi.
And if it doesn't come out, are you going to scream sell, sell, sell?
No, I would never do that. But I do think that, it was a white rush. I do think that it's very important for forward growth. And I think it's even more important for the wealth transfer that's about to happen. Because over the next 10 to 15 years, unfortunately, we are going to go through a very large wealth transfer. And I do think that having those services is going to be huge in capturing more dollars. And I do believe that business banking is an entryway into wealth management, because when businesses put their checking account, savings account with SoFi and start taking business loans from SoFi, there's also a chance that they have them be their administrator for their 401 and 403b funds. So can only be good. They already have the platform.
I just got a DM. My fiance just got a 5.1% student loan rate through SoFi. She was currently paying 7%.
Amazing.
Gotta love it.
Gotta love it. Originations, baby.
Originations. And then what's the chances that customer also has the checking account, maybe some other products?
I mean, think about it. SoFi has proprietary ETFs and mutual funds. They become a wealth management company. They become a custodian for 401k accounts. Not only do they get the, whatever you call it, the administrative fee that I get charged every freaking quarter, but every person who gets placed into a SoFi target date fund now or a SoFi S&P fund, they're also getting the annualized you know what it is, expense ratio also.
Yeah.
They get two ways. It makes so much sense.
Yeah, the ETFs on SoFi do not get enough love, especially for their performance. They're actually really good. And there's not a lot of assets under management there. I actually think they're in losses on a lot of those products.
But we need a wealth management firm. And does SoFi even do IRAs right now?
I
don't
think
they do. I could be wrong.
I think so.
I don't think they do.
Okay.
Chat, does SoFi have an IRA?
They'll tell us. George says yes.
Somebody said no, they don't.
No, they don't. That's good. Okay, we're 1 for 1.
I'll just type it in Google and say SoFi IRA.
SoFi has IRA, of course.
They do?
Now
Okay.
there's a lot of yeses. From my
All right, so
understanding,
yes, they do. Okay, thank God.
my understanding is that they for the most part, a lot of the account options they actually do have.
Okay.
Introducing low mortgage rates, claim at least 75 or 0.75 lower mortgage rates. Just got the email. Yeah, they've been having a partnership with, forget the name. You'll probably see it. Sage in or on the mortgage side. I don't know how big it'll be for them, but it's just referral base.
Regardless, I think SoFi is going up. So I'm excited for 2026.
And so you said north of 50.
I think they
How are you getting? How are you?
Chance.
Tell me what's making you think this.
I already told you.
Okay, no. But from a valuation perspective, does 30% justify them? You know,
If Palantir can go to 200 on the valuation that it has,
but is
SoFi
that
at
going to be the
50 by the
benchmark
end of
for
next
every
year
company?
seems like a steal.
Is that going to be the benchmark for every company expanding their multiple? Is whether or not
seems to be the benchmark right now.
That's fair.
I'm just saying, SoFi at 50, is that as crazy as Oklo at 25 billion with no revenue?
No,
just
dude.
Saying.
No.
Just saying.
I get it. The only thing that I worry about for SoFi in terms of a multiple, and I worry about it for Robinhood too, is that they're more cyclical businesses than a Palantir or an Oklo.
So they're
that's kind of funny, right? Thinking of Oklo as a cyclical business. You need a business first, but no, I'm kidding.
Think about this. They're expected to do 59 cents of EPS and next year, and they're expected to do 37 cents this year. Let's just say those numbers happen. That's 60% year-over-year growth. I think that they can do probably closer to 75 cents next year on EPS. So that would probably put them around 48 PE. And then for 2027, they're expecting 82. The range, you know the range for 2027?
Wall Street's expecting 82. SoFi is expecting more than 82 on 2027. I'd call it probably closer to 90, 95.
I think they're over in 2027. They're over $1.
Yeah.
And if that happens, they're probably in low 30 PEs right now on a forward basis. I mean, huge amount of growth. So, yeah, I can see it.
Yeah.
It's what's going on at BMNR? Did they report earnings also?
No, I don't think so.
Why was everybody saying they're reporting earnings today?
I keep hearing that. Dude, go on their investor relations. You tell me if you can find anything that has to do with earnings. There's I went on Earnings Whisper. I went on Trading View. I went on Earnings Hub. All these different places, they all say different dates. Some of them don't say that they're reporting earnings at all. Then I go on BMNR. I can't even find anything. No calendar.
No bueno.
So this is their investor relations. Where am I finding there's nothing scheduled here in the company news.
Are we still buying more BMNR?
I haven't purchased in the last few days. But I purchased Friday night or Monday morning. Something like that.
How are you feeling about Nvidia? So let's talk Nvidia. The stock that Tanner got right before anybody. The stock that Tanner told me to buy, and I just told him he was a moron. And he was very right, and I was very wrong in 2023. Before the ChatGPT moment, Tanner was super bullish on Nvidia. It was when revenue was flat, and he was very right, and he deserves a lot of freaking credit. And, he continues to be right. And you know what? It's your moment, Nvidia. We discussed it when I became bullish over the summer before it went on the run. I thought, maybe it gets to 185 by end of year. And you're like, dude, it's going to 225 or higher. Looks like you're going to be right again, sir.
It was a crazy prediction. It still seems like it, but I remember so many comments that were like, whenever I put it in, they're like, maybe 170. And I'm like, man,
hold
I
on.
don't think people know
bring,
what's
bring
happening.
up Ozzy's comment. Tanner had to be talked into Google. Okay. Let's not get crazy, guys. Let's not get crazy. He had to be talked into that one.
I was like, and I said that earlier today. Whenever Google was at its lowest at $90, like sub 100, I was not into Google. I was bearish whenever it was the best time to buy. But at 140, 150, ooh, I was a big buyer. So yes, had to be talked into it. But love it now. And honestly, the next one for me is Amazon. I'm so bullish on Amazon.
You're not wrong.
And I think that 212 area, whenever we were all talking about it, I'm like, I don't know. I'm really confident in our investing group, like the people that we all talk with.
Yeah.
And I think there was a moment with Amazon where I'm like, okay, Steve likes it, Amit likes it, Chris likes it, I like it, Roy likes it, Tevis likes it. I'm like, Matt likes it, you know, and we're all looking at this name through different lenses. And I'm like, it just makes me very, very confident as well, knowing that it's being looked at so many different angles. So I think that we have a really good one here with Amazon. Not for those reasons alone. I mean, for all the cloud-based revenue and AI and stable coins, and that they benefit from robotics and full self-driving and the ability to cut employees because they're finding operational efficiencies is not a bad thing. I mean, if you're a shareholder.
You know what I'm worried about? The fact that there were so many easy buys. I don't think 2026 is going to be an easy year for stock pickers by any means. I think that the big companies are going to get bigger, and I think earnings are going to do well, and I think the market's going to go up. But you're not going to have the opportunities that we had in the beginning of this year.
Not as easy to find, but you know what? There's always like you could say that about 2025, and then like look at Amazon, like it just stayed flat. Like I just think there's always going to be these times where people just lose hope in names. Think about AI and all of the names heavily investing in AI, and we got to just buy Google at 140 because people left it behind during that moment.
Yep. And we got to buy Nvidia at 98 this year. Think about that.
Yeah.
Nvidia hit 4 trillion, then 5 trillion in the same month.
It wasn't 9, it was like 88.
I was trying to be nice.
I remember seeing it under 90.
Trying to be nice.
But yeah, like even that overreaction, and then everyone, like I could sometimes, like I understand people whenever they watch me and then they're like, okay, well, this is just some guy's opinion. 100% true. Okay. Yep. But some guys' opinions are not worth the same. And whenever Satya Nadella, Jensen Huang, Elon Musk talk, these guys are like, their words speak into existence of what happens next. And during the DeepSeek event, they all said, we are going to spend more, and Nvidia's stock just continued to drop. And I'm like, what is happening? Like, do you think they're all clueless to what's happening in China? You think they get no updates? You think they what?
They're all clueless.
Yeah. Yeah. So I just find sometimes whenever you're seeing all of the great minds, or even like crypto, people call crypto a scam. I'm like, the whole world, every bank, every payments company, Visa's entire earnings call, if you listen to it, it was a stablecoin presentation. And by the way, the older I get, the more I realize that Visa is going nowhere. But like, if all of these companies are all talking about the exact same thing, do you think crypto's a scam? Like, can we not realize that Visa has such a better, clearer view of what this industry looks like? That Jamie Dimon, that, you know, Amazon and all of these things, all of them that are exploring stablecoins, you think they're all getting hoodwinked here? Like, what are we talking about?
No.
And I think there's always going to be those moments. Yeah, some guy in chat. It's Ponzi. Okay. So, sorry, to sum up what we were saying before I hijacked that, I always think there's going to be a stock picking moments to find good deals in the market.
I'm not saying there isn't going to be. I'm just saying it's not going to be nearly as easy. Like, you could have taken your pick at the beginning of the year before the tariffs happened. I just don't think it's going to be like that next year. I mean, sure, I think the market's going to go up, but I think a lot of easy money has been made on a lot of things. Like, I'm sorry, Apple went to like 170, 180. And people thought Apple was dead. Like, no. Sorry, company that does how many times have I said this? Company that does $100 billion in net income, you're really going to write that off? Like, seriously.
So I was definitely one of those people. I never thought Apple was going to zero. I just still think, and still to this day, the multiple that they are demanding doesn't make much sense. Last quarter was really good. Last quarter was really good. If they put up that again, I'll stop talking.
I'm not saying that the multiple makes sense, but at the same time, why shouldn't Apple have the same multiple as Costco or Walmart? You tell me you'd rather own Costco or Walmart than Apple?
No.
Just if those are your three options.
No,
you're
bro.
picking Apple.
that is so.
No, I'm just saying, if those are your three options, you're picking Apple.
If I'm like, oh, well, you know what? Kathy Wood is not that good of a money manager. And you're like, oh, who? Okay, you get to pick Kathy Wood or Mark Benioff, or sorry, not Mark Benioff. Sorry. Bernie Madoff.
No,
it's like, those are not my two options.
Listen, three great companies. If you had to choose one of the three, there's no way you're choosing Costco or freaking Walmart over Apple.
But I don't have to pick any of those three.
I'm not saying you do, but I'm just saying if they have a bigger valuation than Apple. I mean, you're telling me that Apple's doesn't warrant a better valuation than them?
Once again, I've never said that.
I didn't say you did. I'm just making a generalization.
So you're telling me I'm actively not telling you that. Costco is the most expensive.
Costco's disgusting.
But Apple's up there.
Disgusting. And if Sir Joseph Carlson would like to talk about it, Stephen Fiorillo is listening. But anyway, Costco's disgusting. I got news for all the Costco people, okay? Wait till Amazon gets into big box and see how quickly I get rid of my Costco membership.
Yeah.
I mean, seriously, I was talking to Matt about this. The average Costco is probably 20, 25-minute drive for most people, if not longer, but we'll say 20 minutes to be safe. So that's 40 minutes out of your day. Then parking's a madhouse.
No, parking's amazing. Costco parking with the extra spaces in between. Come on, you never have a problem parking.
You're being freaking funny now.
It's just the parking is a beautiful experience.
Maybe in Canada, not here, but parking is a beast. Having to show your card and freaking waiting online and trying to maneuver around people and then checking out, it's 2-3 hours. When Amazon already has a logistical network, like if Amazon decides to go that route, why have a Costco membership?
I
won't be wasting 2 to 3 hours of my life going to Costco.
I don't disagree. While I say that Costco is expensive as a stock, I'm a very happy customer.
It's a great company. I'm really not allowed to go there because I need 2 shopping carts because I just buy so much. It's great.
I'm not allowed 500 feet within a Costco.
It's not my, I'm really not. Like, it's me going to Costco is dangerous. I just go in, I'm like, go down a candy aisle. Like, everything's going in. Freaking great.
They are. You know what's so funny is, like, even whenever my girlfriend is searching for something and I'm like, did you check Costco first? She's like, Costco wouldn't have this. I was like, you did not go. You didn't look, because clearly they have it. Like anything. I'm like, they will have it. It's so funny. But That being said, they don't grow very fast, and they have a very high or very low margins and an extremely high PE ratio.
2.9% profit margin, sir.
It's maybe higher than some businesses.
2.97%.
Which is interesting. You would think that Amazon, having a cloud service business, that would give them some sort of premium, but it's not. It's actually making the business worse if you compare it to Costco's margins or Costco's multiple.
Just saying. Just saying.
Costco even has gold. Yeah, they probably made a good fortune on a little craze that happened recently. I think that's continuing to fall.
I don't know if they made a lot of money on it. I mean, they weren't selling it that much over spot.
No, they have everything.
They were sure weren't getting it at a discount.
Yeah, no, they have everything at the same margin, right? So they're not making a killing on the gold, but unless they stocked up before.
Unless they stocked up before and they were selling. Yeah, but I think that they were raising their price as spot went up. So
yeah, so they made a little bit of money there.
Yeah, probably.
But then they bought more inventory, and then on the way down, they probably lost that whole margin.
Yeah, physical silver is crazy. When I saw it was at 50 an ounce, like, Jesus Christ. Craziness. Crazy.
What else are you following in markets these days?
Well, I'm glad you asked. Glad you asked, Tanner. Glad you asked. We're doing a deep dive on QXO. I think Chris and I will be talking about it on Monday. And I already started a position. I'm adding. This is my new one.
I was looking on annual. I was like, what the heck does this company do? Wait, what does this company do? What the heck? What's up with all the earnings in one quarter here?
Because they acquired Beacon Roofing Supply in March, I think. And
this is an interesting chart, bro.
Well, yeah, they went from doing like 50 million in revenue to almost 2 billion in a quarter.
Okay.
So Brad Jacobs is going to acquire a ton of companies, and they're going to implement a lot of technology. They're going to look to become the de facto building supply company and logistical network. And he has grown 3 huge companies through acquisitions. He spent decades building this playbook. United Rentals, XPO, and there was another one. I just can't remember the name at the moment. And he has done over 500 M&A deals in his career.
Wow.
And in one of, I think United Rentals, he grew that company by doing over 200 M&A deals. And his goal is to turn QXO into a $50 billion a year revenue company. And I think he's going to achieve it pretty freaking quickly. Beacon Roof and Supply was the foundation of it. There's over 7,000. Think about that. Over 7,000 individual distributors for building supplies in North America.
I've never even heard of this guy.
Brad Jacobs, look him up. He's a freaking legend.
He
legend.
Looks like a legend.
I'll tell you off camera what I said about the picture you're looking at. I can't say it publicly. But before...
It's the craziest way to open up a browser, dude.
Brad Jacobs, baby. Guy's a legend.
Yeah. Okay.
And here's the other thing. I did not know this when I started the position. Go to their website and go to the board of trustees.
Okay. Who am I going to see on there?
I want to see
someone I recognize.
I want to see a reaction.
Well, it might take me a second. I have not. Board of directors?
Yeah, board of directors.
Oh, okay. I see it.
Yeah.
That's funny.
Yeah.
Can I say it a lot? Well, yeah, I guess.
Public information.
Yeah. Independent director Jared Kushner.
and he made a huge purchase too.
Why is that? So this is your secret little stock, that you're looking into.
Going on, baby.
QXO.
Big bad Brad.
I'm not going to follow you into it out of principle.
I'm betting on the jockey, baby.
I'm just going to stick to tech because there's good.
All I'm saying, I think 2026 is going to be a rotation year to some degree, but just follow me down this path for like 1 minute. All right. We're entering into a lower rate environment. The US has a dramatic need for more houses. The average median age per house is 40 years now. We've had more inclement weather, more extreme weather over the past several years. We've had more people had to make involuntary repairs to their homes. As more inclement weather happens, we need more roofs, more windows, and more repairs. In addition to that, the home builders are going to have a lower cost of capital and mortgages are going to be cheaper. I think we're going to get a super cycle of building because the housing market has been locked for so long. I also think that people will be more incentivized to tap a home equity line of credit to actually put a new roof on and do other things. I love it. I love it.
Piyush donating a what's the price of QXO shares right now?
$18.50. He just gave you a whole share.
Gave me a little bit more than a share.
I love it. So
nice.
Anyway, I think that they're going to be in huge demand over the next couple of years. And if he goes and acquires 10, 20, 30, 40 companies, he's going to build synergies. He's going to unlock value by streamlining the process and the technological platform. They already said that they found more synergies than they originally anticipated. I think that this is a slam. That's just me. And when you look at his pedigree, you look at what he's done, you look at how he built his other companies, I think he's going to do the same thing with this. And I think this is his last big thing before he rides off into the sunset.
All right. I like that.
Much different pitch than I gave you guys on the after hours.
Yeah, much longer or much shorter.
I actually did a lot of research. Like before, when I pitched it to you guys, I really didn't look into it much. I freaking went down the rabbit hole and really, really got into it. This is what I was considering selling part of SoFi for. Now I just got to free up cash or add more cash.
But it doesn't look like you're selling SoFi now.
SoFi. No.
You got a lot of names to buy. You got to get Robinhood.
I'm not getting Robinhood.
We got to go through and look at what you or what I hold that you don't hold. Are you a ServiceNow shareholder?
No.
What about Reddit? Reddit's tomorrow. You hold any of that? I'm really thinking about getting into Reddit.
No. For what? Why would you need to get into Reddit?
For what?
Who cares about message boards?
Who cares about message boards? I think that there's
message board. Who cares?
There's a lot of demand. Buy your second share of QXO.
See?
Look at this.
I love it.
Like I already told Steve, I was a shareholder before he was because I actually think it was Piyush that gave me the first share or first couple of shares of QXO in the first place. But that was back in July, I think. Something like this.
Yeah. And I did write an article about QXO this week. And I'm telling you, I went down every freaking rabbit hole.
And you're bullish still.
You go through the deck.
For what's the timeline? Like for next quarter?
2-3 years. I think it's going to take some time. Like he's trying to do a hostile takeover of a company right now. I mean, this guy is not wasting time. I'm sure he's got more deals in the pipeline.
All right.
I mean, go through the earnings deck. like you're going to be like, this is freaking really interesting. When you look at how much value he's created for shareholders with his other companies.
I've never, okay, guys.
I love it. Look at them getting after it.
Oh my God.
Look at
I've
them
got
getting after it.
4 shares of QXO. All right.
Man.
I'm going to have to actually look into this business now. I'm starting to accumulate quite a position here.
Dude, in all seriousness, just go through the deck. You'll freaking like it.
Yeah, but I honestly, I have kind of a thing about, do we want to listen to Trump and Xi real quick? Meeting in South Korea?
Not really.
No interest?
No. Oh, yeah. Interest. They're going to make a deal. Like, they're not going to make a deal? Really? Like, come on.
Okay. Do you want to listen?
How long is it?
It's live right now.
No, I'm not. I'm really not that interested.
Look at everyone saying yes, yes, yes. Just listen. Yes, 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 yes. Let's take a peek-see.
All right.
Many times, need demands. Ago, in the latest round of consultation, our 2 economic and trade teams reached basic consensus on addressing our respective major concerns and made encouraging progress. This provided the necessary conditions for our meeting today. Mr. President, I'm ready to continue working with you to build a solid foundation for China-US relations and create a sound atmosphere for the development of both countries. Mr. President, you care a lot about world peace, and you're very enthusiastic about settling various regional hotspot issues. I appreciate your great contribution to the recent conclusion of the Gaza ceasefire agreement. During your visit to Malaysia, you witnessed the signing of the Joint Declaration on Peace along the Cambodia-Thailand border, to which you had provided input. China has been helping in our own way Cambodia and Thailand properly settle their border disputes, and we have also been promoting peace talks to resolve other hotspot issues. The world today is confronted with many tough problems. China and the US can jointly shoulder our responsibility as major countries and work together to accomplish more great and concrete things for the good of our 2 countries and the whole world. I look forward to exchanging views with you on questions important for our 2 countries and the world. Thank you.
Thank you. Thank you very much. It's great to have you all. Thank you very much.
Mr. President, why did you change your nuclear plans? Why are you going to be doing more nuclear testing?
Thank you very much, everybody. Thank you. Thank you. Thank you very much.
Okay, we're heading out.
Okay, well, that was fun. He wasn't ready to take that question. You back?
I've been here. I mean,
yeah, seriously. That reporter's just trying to start World War III in front of Xi. Like, chill. Okay. Yeah, so I was going to say with QXO, it's not that I don't like what you're saying at all. I just always find that, like, people will say, like, oh, you know, there's a rotation away from tech or something like this. There's never been a rotation away from tech since the dot-com bubble. I mean, it's only continued to improve margins, find new industries to tackle, solve more problems in the world, all of these things. So anytime that I get interested about another name and want to learn a new industry and see that there is a housing problem and like those could be opportunities, I just realized that, like, why complicate things whenever I've just, like, solved a money problem? And the solution to my money problem is just buy more tech. keeping things simplistic and buying what I already know works.
What if QXO outperforms tech next year?
Yeah, but is that... Oh, hold on a sec. But maybe it won't.
Maybe it won't.
Like I said, Palantir or big tech just works. Palantir 201.32 in the after hours right now.
What is wrong with people?
201.
What is wrong with people? This thing's going to be $1 trillion company that doesn't even do freaking $2 billion in net income. Like, people are out of their freaking minds.
I'm buddies with Tom Nash. And I remember he put out in like a thumbnail or whatever a while ago that said Palantir will be a $500 billion company. And I was like, man, I love this guy, but this is such a dangerous comment to make. Like it's so clearly not going to be a $500 billion company. And like, it's just sort of dangerous to say those types of things. And here we are tomorrow, this company's going to open up and it'll be $500 billion. Like,
it's crazy. Like, this company, look, it's an amazing company, but it doesn't even matter if they grow 50% year over year in Q3. This valuation is insanity. It's insanity.
it is insanity. PE of 662 times.
Yeah, like, guys, I'm not always right. I have not been right. At some point, this is going to be insustainable. And I don't know when that happens. Maybe it goes to 250. But this is crazy talk.
An Nvidia partnership definitely doesn't hurt. You know?
And keep in mind, I'm a freaking shareholder.
Yeah. Highest valued stock of all time? I don't think so, no.
No.
It's hard to value that, because have there been price to sales that have been higher? Yes, but like sometimes that's based on companies that don't have much sales. There are companies that are trading at higher PEs, yes. So it's sort of hard. It's hard to value what is the most overpriced company of all time. But you also don't want your company to be on that list. Well, you do whenever you bought super low, but you don't want to be buying a company that's on the list that the people are floating around as the most expensive name of all time.
Like, no, you don't want that.
So, but yet people seem to be very happy shareholders.
I think they should be.
But you still hold this company, right?
I do.
What are you doing? If it starts to fall, that's your...
Look, I have shares that are naked, and I have shares that have covered calls on them. The ones that are naked, I'm considering exiting.
And your covered calls are...
I'm up so much on it. It's on those shares, like, I don't know.
And your shares are underwater?
No, I'm just saying, like...
No, your covered calls, I mean, sorry.
Well, yeah, of course. I got to figure out what to do with those.
I called this guy yesterday whenever Nvidia was over 200. Now I got to call him for another company.
10:30, don't call him.
What, do you think he's sleeping at this time?
He may be.
Oh. All right.
I don't know if he is or he isn't, but dude streamed 9 hours today.
I streamed 9 hours yesterday. You know that?
No, I didn't.
So I can call him.
Hey, call
I don't want to now.
him. All right.
Because I don't want to.
Okay.
No, I did a SoFi, my SoFi earnings live yesterday was 2 hours and 43 minutes. Then I did GTC, that was 2 hours and 20 minutes. Then I did Visa earnings, that was 2 hours and 15 minutes. And then I did my Big Tech Frenzy, which was 1 hour and 48 minutes. But you know what? We love markets. And I love this audience. I did call him, guys. He didn't answer. I actually do think he's sleeping. He's got to get up early in the morning. But yeah. So tomorrow, are you watching Big Tech? We got Amazon, Apple, Coinbase, Reddit, Cloudflare, Strategy, Roku, MasterCard, Eli Lilly, Roblox. Any of these interest you?
Amazon and Apple.
That's it?
Yep.
We got Altria tomorrow.
Really? I'm interested in that.
S&P Global?
No. But the real question is, are you going to play GTA 6 with Mad Me?
No.
Really?
It's not that I wouldn't enjoy it. I think I would love it. I think it would consume. I think I would.
Yeah, we're going to stream it.
My aspirations in life would be halted.
We're going to get the whole community involved. We're going to go like 100 deep, and we're going to wreck it.
And when's the release expected again?
I don't know, like March or May or something like that.
May, yeah.
End of May, right after earnings are over. A little summertime fun.
I heard the wonderful fruit. One more time for Timothy. Cook 'em. That's $20 going towards Apple shares right there. The wonderful fruit from Steve. Thank you. A different Steve. How does it feel to be the official New York Steve?
I don't know.
Sounds like a cut of meat.
The New York Steve?
Yeah. I'm not going to call him again. I'm not bugging him. Okay. We are going to do, because Steve is now officially a YouTuber, we're going to do a follow-up stream on potentially SoFi, potentially Big Tech earnings on his channel next. If you guys are interested, you can follow my buddy, Steven Fiorillo.
Thank you so
Right here.
much.
And we'll wrap there. What time are we doing it? The next stream? Saturday or what did you say?
No, we'll do it next Wednesday, right?
Next Wednesday.
Do it next Wednesday, like 9 p.m.
Yeah. And you've been enjoying it, eh? You've been live a lot.
Who?
You.
I got home at like freaking 6:30. We mean I've been live a lot.
Dude, in the last couple of days, you've been live.
Yesterday, I was live a lot.
Yeah, you probably did 9 hours of streaming yesterday.
No, I didn't. I did like freaking 5. Stop it.
Look at the times on these live streams. 2 hours and 30 minutes, 4 hours and 20 minutes, 2 hours and 40 minutes. He just got into this. Now you're live multiple hours. You're talking to chefs, card guys. How was the chef conversation? What did you even ask him?
Oh, dude. Chef Paul is great.
Well, what food do you like? Oh, I like this food. Oh,
No,
nice.
we're talking about like the real ways to cook steaks, how he hasn't cooked on gas except going to his parents' house since like 25 years old. He only uses charcoal. We got into it.
Really?
Yeah.
And you like that stuff?
I like that stuff.
All right. I got nothing against Chef Paul. I've got something against podcasts with a thing that doesn't involve the sense that it's designed around. You're like, chefs are around eating. You don't get to eat anything. You're just listening to them. Like, it's a profession that you're not even talking to the person that's doing the talent. So I just don't imagine that there's a lot of cooking podcasts. That's all. But I'm sure there is. I'm sure there's a whole world of cooking podcasts. That's just not something that I follow.
Listen, we're breaking rules over here.
That you are.
I do what I want to do. All right.
Yeah.
I am thinking about doing a mid-afternoon stream tomorrow when you and Amit are not streaming.
When's mid-afternoon?
I don't know, like noonish.
Oh, okay. Yeah. Sorry.
Like noon to 2, noon to 3 tomorrow.
There you go. I think that's a beautiful time.
I think it's a great idea.
All right. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Check out Steve. Bye for now.
Thank you. Appreciate it. See everybody later.